Daniel, welcome. Good to have you with us. Let's look at three that we've picked out for you to comment on. The first is Airbnb, which you have a buy, and I think it's a 205 price target.
Yeah, that's right. Airbnb, we view that as a secular winner in this space. And so if you look at some of the trends that we're seeing within the travel sector, alternative accommodations is clearly has significant tailwinds. So we are seeing length of stays continue to increase. And in addition, supply is less of an issue for Airbnb than it is for others like Booking. So Airbnb sees the fastest growing markets have the fastest increase in supply. And so in other words, what you see there is the network is increasing itself. Unlike Booking, which we have a hold rating on, Booking has some company-specific and unique headwinds related to its exposure in Europe and in Eastern Europe in particular, as well as what we expect to be potential supply constraints. So as inventory becomes less or more scarce for the likes of Booking to come by as occupancy rates start to increase. So thus far, the recovery in travel has been much more ADR or price driven than it has been occupancy driven. And as occupancy starts to come back, which we fully expect it will, then supply for the OTAs like Booking, we expect will become more scarce and a potential headwind.
Let's move on then to another one you like, and that is Wyndham Hotels and Resorts. It's a reopening play, you say. Lots of U.S. Exposure. They run timeshares. They run hotels. They've got a lot going on. Yeah,
well, the timeshare business was spun off into a separate entity, but
I beg your pardon. Didn't know that.
Wyndham is a top pick for us in lodging, and the reason for that really boils down to its domestic exposure and its drive-in traffic. And so when you think about some of the headwinds related to higher fuel costs in the near term, that's going to deter certain travelers from traveling by air. But the drive-in traffic should still remain robust, in our opinion. Mm-hmm. And so for that reason, we expect that we'll see continued tailwinds for Wyndham, in addition to its valuation, quite frankly, which trading at less than 14 times forward EBITDA is nearly 2 turns below the peer group.
Daniel, would you characterize overall the performance of these stocks the last couple months as disappointing?
Well, disappointing related with respect to what we expect because of pent-up travel demand, which is really tremendous when you think about it. You know, in certain instances, you have people who have been locked in for the past 2 years. They're really at the edge of their seats, no pun intended, wanting to get out there and travel. But related to the near-term headwinds that they are facing, so whether it's higher fuel costs or whether it's potential derailment in Europe and particularly in Eastern Europe, where Booking has high single-digit exposure, I would say that the performance is kind of as expected.
All right, we'll leave it there. Daniel Adam with Loop Capital. Thank you very much.